Join me as I dive deep into the stock market and challenge myself to uncover the surprising trends that you probably never knew existed. Understanding stock market trends is crucial for investors and the general public alike. It's the key to making informed investment decisions, maximizing returns, and minimizing losses. Yet many of us tend to overlook this essential aspect of the market, focusing instead on individual stocks or short-term gains. One of the biggest misconceptions about stock market trends is that they're unpredictable and can't be understood. Many investors think that market movements are random and that it's impossible to identify patterns or make accurate predictions. But that's far from the truth. In reality, market trends are influenced by a range of factors, including economic indicators, geopolitical events, and investor sentiment. Another common misconception is that all investors are on the same page when it comes to market trends. However, the truth is that different investors have different perspectives and approaches to understanding trends. Some may focus on technical analysis while others rely on fundamental analysis. And then there are those who use a combination of both. The point is that there's no one-size-fits-all approach to understanding market trends. Despite the challenges, many investors still try to predict market movements using various methods, from technical indicators to economic models. However, these approaches often fall short because they fail to account for the complexities and uncertainties of the market. It's like trying to predict the weather. We can make educated guesses, but ultimately, we're at the mercy of the winds of change. Investors also tend to get caught up in the emotions of the market, letting fear, greed, or euphoria cloud their judgment. This is where having a solid understanding of market trends can help. By recognizing the underlying patterns and drivers of market movements, investors can make more informed decisions and avoid getting caught up in the noise. Subscribe to RYFA Stock Market for more stock market tutorials on how to invest and trade. Great technical analysis. When it comes to stock market trends, there are several types that investors should be aware of. The most obvious are bullish and bearish trends. A bullish trend is characterized by a sustained increase in stock prices over a period of time, often driven by strong economic growth, low unemployment, and high investor confidence. On the other hand, a bearish trend is marked by a prolonged decline in stock prices, often triggered by economic downturns, geopolitical tensions, or high interest rates. But there are other trends that can have a significant impact on the market, such as sector rotation, where investors shift their focus from one sector to another. For example, during a recession, investors may favor defensive sectors like healthcare and consumer staples, while during a bull market, they may flock to growth sectors like technology and biotech. Understanding these trends can help investors identify opportunities and avoid pitfalls. Trends can also be driven by external factors such as regulatory changes, technological advancements, or environmental concerns. For instance, the rise of renewable energy has led to a shift towards sustainable investing, while the growth of e-commerce has driven the demand for logistics and supply chain management. By recognizing these drivers, investors can position themselves for success in the long run. So, what's the surprising insight that can help you better understand and capitalize on stock market trends? It's this. Trends are not always what they seem. Sometimes a trend may appear strong on the surface, but beneath the surface there may be underlying weaknesses or contradictions. Conversely, a trend may seem weak, but it may be hiding underlying strengths or potential. The key is to look beyond the surface level and dig deeper into the data. By doing so, you can uncover hidden patterns and relationships that can give you an edge in the market. For example, you might find that a particular sector is trending upwards, but the underlying stocks are showing signs of weakness. This could be a sign that the trend is about to reverse, and you can position yourself accordingly. Alternatively, you might find that a particular trend is being driven by a specific factor, such as interest rates or inflation. By understanding this driver, you can anticipate how the trend will respond to changes in the underlying factor. This can help you make more informed investment decisions and capitalize on opportunities as they arise. In conclusion, understanding stock market trends is crucial for investors and the general public alike. By recognizing the common misconceptions and challenges of predicting market movements, and by understanding the different types of trends and their drivers, investors can make more informed decisions and achieve their financial goals. Remember, trends are not always what they seem, so it's essential to look beyond the surface level and dig deeper into the data. Thanks for watching. Subscribe to RYFA Stock Market for more stock market tutorials on how to invest and trade. Great technical analysis. Share your thoughts in the comments below.